had we had them when we first started flipping and wholesaling, we probably wouldn't have done that first flip or that first flip, because we had lost. Even though we made money, we probably, I mean, on average, we probably all made like $10 an hour for all the time, blood, sweat, and tears that we put into that first flip. We made money, but we didn't make the money we should have. So in my mind, we still lost money there.
Hi, everybody. Joseluiz Morales. Welcome back to the Morales Group Show. This is episode number 75. Today, we've got a very special guest, Pili. She is a real estate investor out of Tennessee, and she mainly invests in large multi-unit properties, 25 units, 30 units, 50 units, 90 units, 100 units. So we're really excited to have you on the show, Pili. Welcome to the show.
Super honored to be on. Super glad to connect with you. I can't wait to give all the value to your listeners. So excited.
Absolutely. So before we get into the interview, I just want to remind our audience, if you've enjoyed some of our previous interviews, if you like the content that we're sharing, make sure to hit that subscribe button. So Pili, let's just start off with who is Pili and how did you get involved in real estate investments?
Who am I and how did I get involved in real estate? So I could take you back to birth, but I don't think you want to know about that. So I am originally from Hawaii. A lot of what I come from, a lot of who I am comes from the aloha spirit. My personal motto is to lead with aloha. So just to give you like that background. How did I get started in real estate though? So I have to take you back to circa like 2012. I actually met my husband in 2003. We worked in a bar together for many, many years. I moved to California, I moved back, and we continued working together until we actually finally saw each other. And this was in the ending of 2012. Into 2013. So we worked one more year at the bar that we both ran and managed, and we were bartenders there. And Hurricane Sandy had happened the year before. Why this is important, his family's business is in large construction, namely lifting and moving houses. I'm not talking about moving furniture. They actually lift and move the entire house.
Wow.
So Jason and I kind of part-time jumped into the family business because they needed the help. All of a sudden their business, unfortunately, got really, really busy. So his brother jumped in. The family business was booming. And after another year of working in the bar industry and a year of really solidifying our relationship, Jason and I decided to take the leap and start a family. I did not want to have anything to do with the restaurant industry anymore. And we sat down as a family, like myself, Jason, his family, and discussed what was the next steps. And his father had always wanted to get into house flipping. So we looked it up. I started jumping into bigger pockets, started researching, and saw that becoming a real estate agent was the best thing for me to do, because I had some construction knowledge, and I had some knowledge because I was working for the entire year within his family's company. So I had some knowledge, but that wasn't going to be my skill set. I wasn't going to pick up a hammer or lift up a home. So I needed to find the value that I could bring to the business, that I could bring to the family. So I became a real estate agent. So that's basically how I got in. I became a real estate agent, got access to MLS, and started sourcing deals. And we took down our first deal. I believe it was 2014, 2015, our first flip deal then.
That's awesome. Congratulations. A funny story. I always get the clients that tell me, if only I could pick up this home and take it
move
somewhere else, then I would buy it. And I'm always like, I don't think that's going to work, you know?
But some people have done that. Some people have done that, like in the New Jersey, in the Jersey Shore area. Some people actually, like they'll actually sell a house off their lot, and somebody will come and have us move it onto a different lot because it's a perfectly fine house. They just want a different house. So why not?
It's funny. I heard of a story of a billionaire who bought his childhood home and then moved it to his ranch that he had, like a 500-acre home, and he moved it there and now has it like almost like for display. But that was the story of it. So you got into real estate as a real estate agent, basically started helping people buy and sell. But it sounds like one of the end goals was also to transition, to get some knowledge and then transition into the investments. What did the business look like as a real estate agent? Are you still a licensed real estate agent? And if so, do you mainly do your own investments? Do you still work with traditional buyers and sellers? And any advice that maybe you can give any real estate agents looking to transition into investments?
Fantastic question. So I became a real estate agent primarily for access to the MLS. And little did I know I was going to learn a ton because my broker at the time was a real estate investor. So just by watching and learning and just basically sitting in his office and through osmosis, like hearing him talk, hearing him negotiate, I learned a lot through that first kind of mentorship position. I know a lot of really, really good real estate agents. I'm not one of them. So when it comes to being an agent, I love representing buyers. I love taking them to homes, so much so that I would take them to every single home they wanted to go. I became like their best friend. And that's how you're supposed to be, sort of. You have a fiduciary duty towards your clients. So as a buyer's agent, I love doing it, but I didn't have the time to because I was growing a family. We had so many businesses going on, and we were growing our flipping and then wholesaling businesses at the time. So I knew my goal was to invest. I did the agent work kind of on the side and to learn how to really talk to people. Because when you're talking to clients, sellers and buyers, you need to let them know and understand you and let them know and understand how you can help them. So for any agent that's trying to transition into investing, simply do it. I mean, you have all the tools you need at the tips of your hands. You're already investing in the people that are trying to buy properties from you. So why not do it for yourself? Why not jump in and use the knowledge that you have of markets, that you have of real estate in general, and just simply jump in? I mean, like I said before, Bigger Pockets is a great way to just find out what niche you want to get into. There's so many levels of investing that you can get into. You can get into flipping and wholesaling if you're residential, or you can go into the commercial side, become a commercial broker, and really, really learn that side of the business.
Not only that, but like I think what you mentioned is important about getting into real estate first, because a lot of people don't start investing not because of the money, it's mainly the knowledge. Because once you learn the knowledge, literally like it opens up doors tremendously. Like had I known what I know now when I got started, my real estate portfolio would have been a lot larger than it is now. And I think that's the main thing. The other thing that I like, because I'm also an agent, but I also invest. I have about 57 units in Southern California, mainly multi-unit as well too. But what I liked about being an agent is that I got to learn why people make certain decisions. So I got the psychology behind why is this seller selling, like retirement, upsizing, downsizing, don't like the policy. It's different things. So you really get to understand like the human behavior aspect of it, and that actually helps you whenever you're presenting offers to people, and it just helps you to understand where they're really coming from. So I would say that
well, truly listening to people, because now as an agent, when I used to go, and still to this day, when I go on acquisitions meeting, when I go on to meet sellers, I feel like I have a duty towards them to provide them with the best opportunity, regardless if it's me, or maybe it's another investor that I know, or maybe it is ... Even when I'm talking to investors, for instance, when I'm talking to investors, I want to make sure that I am the best person for them, that I am truly the fiduciary for their money. And if not, I'm going to find that person that might be better.
It's very relationship based, meaning you do the right thing, it always comes back. Like it may not come back right then and there, but I agree with you 100% on that.
100%. No, I am like on a soapbox when it comes to this. I have a saying now: relationships turn into partnerships.
Yep.
For everyone that's listening right now, relationships will turn into partnerships. make the relationship the utmost. That comes first. The partnerships will come later. The money will come later. The real estate will come later. The deals will come later. But if somebody doesn't know, like, and trust you, they're not going to open up their world to you. So make those relationships super strong first.
And doing the right thing for the client, like you said, just do the right thing for the client. Everything else will play out. And if you can guide the right person, connect them with the right individual, that'll help them out tremendously. And for some reason, it always comes back around. What I was going to ask you is, I don't know if you remember the details on your first deal. I always like to get into that because I know that's a big, I think that once people get their first deal, it becomes easier to get their second and third deal. It doesn't have to be precise. If you found it on the MLS, if you found it direct to owner, and just what you guys did with it, if you guys flipped it, if you guys made money, if you guys lost money. If you have any details on that, I think that always helps the audience somehow.
Okay, so let's go into it somewhat. So the first deal we did was a flip deal. So first you have to understand while we were flipping and wholesaling, our first idea was to take what we know about house lifting. So we would take these Cape Cods, these flood ravaged homes, and lift them out of the BFE, the base flood elevation. Not only add what we would do, we would lift it up and then add a garage, and that would take it up above the base flood elevation, where the insurance was a lot cheaper and people could live their lives not having to worry, or not as much, that their home would flood. So our idea was to take the house up once and then take it up again. We would add a new first floor, and we would have a garage under it, essentially turning a Cape Cod, a single-story home, into a colonial. So this would become like a three-story home, and we could add like more bathrooms, we could add more bedrooms. I mean, the value that we were able to add was phenomenal. So this is actually what we did with our first few projects. Wow. So I don't remember the actual numbers, and I apologize for that. But this first deal, the one thing that I want your listeners to learn from this is we jumped in too quickly without really understanding how much time it was going to take. You have to understand, at that time, New Jersey, the Jersey Shore, actually much of the East Coast was ravaged by Sandy. So these towns that had maybe 10 to 12 permit applications maybe per week, we're now having 50, 100 permit applications because there are so many people trying to repair their homes, trying to get the simplest things done, and they could not keep up. So what should have taken us at most 6 months to complete, it took us a year. It took us a year to complete the entire flip. So time is money. We still made money on the project, but not nearly as much as we should have. Yeah,
that is so important to recognize that, and for people to realize that sometimes projects, and there's holding costs, sometimes people think that you just buy a property and sell it, but they don't take a look at the holding costs associated with a project. That's interesting. Okay, cool. And then how did you transition into the syndication world, or the multifamily investing? So at what point did you make the decision, okay, I'm not going to flip properties, or I'm not going to flip the smaller properties. I'm going to get into the big ones? Because for me, I was buying single families, duplex, triplex, and then I heard of a guy just saying, well, you got to buy units, and then all of a sudden my mind shifted to buying units. At what point did that shift happen for you and your family? And how did you make that leap as well, too?
So it was actually at a RIA meeting. I am the risk adverse person between myself and my husband. I don't like taking risks. So this was out of my norm. Went to a RIA meeting. I was approached by an investor. He said, I have these turnkey properties in Indiana. I said, no. He was like, no, really, Pili, you should take a look at them. Of course, I got to know this investor. He seemed legit. So I was just like, okay, I'll look at them. So I look at them and I'm just like, well, this might actually work better with duplexes, triplexes. And I was just getting into learning about rentals, about buy and hold, the BRRRR strategy that we find on Bigger Pockets. Yeah. So I talked to him again, and I'm just like, you know what? You've shown me all these single family properties. Do you have duplexes, fourplexes? He was like, well, we usually don't deal with those. I was like, well, if you do, I'd be interested to learn and like look at those. So he showed us a few, and I showed the numbers to my husband, and he was like, wow, this really works. And I normally don't bring the big idea. This story becomes important later on. I usually don't bring the big idea to the table. So we buy 2 duplexes in Indiana, and the ROI on these are like, I don't know, it was like 22% or something once we exited. So my husband sees the writing on the wall. He sees, okay, if we can do this with 2 duplexes, and he sits down with me, why don't we do this with 4plexes or 8plexes, or why stop there? Why not 40? Why not 400? And I basically said, absolutely not. No. With a capital no, because I'm like, and the other thing you have to understand about, especially my personal journey through real estate, I've either been pregnant with a small child. My children's ages right now, as of today, are 6, 4, and 3. So I have 3 under 6. So we're growing a family, we're growing our businesses. I'm pregnant, and he asks me if we can get into another business. And you have to understand, we have a construction business, the family construction business. He has a restaurant in New York. We have our flipping and wholesaling business that is doing really, really well. And we had just jumped into a mentorship program, and we were scaling that. We were learning systems, and it was great, going really great. So it's a good thing my husband knows how I operate. He was like, okay, let's dig in. Let's get mentorship right now. Let's just dig in and get mentorship right now. We were able to, within 8 months, close our first 94 unit in Kentucky. But I almost said no to a pretty what is our life now? Now we're completely focused in multifamily, but that's how we got in. I believe in your failures and your successes. Doesn't matter which one they are. They're nothing but stepping stones. Yes, pat yourself on the back for those successes, celebrate those successes, celebrate those wins. Also celebrate those failures in a way that you learn from them. Because if you don't learn from your successes and you don't learn from your failures, then you're just stagnant. But if you use those as stepping stones, so throughout our investing journey, we've used those as stepping stones. For myself, it was agent to flipper to wholesaler, and then now to multifamily syndicator. And who knows what will happen in the future. But that's how our journey took us to our first multifamily.
That's awesome. Now, you mentioned 2 things that I felt were important. One of them was the RIA event that you went to, because that's almost like a little idea popped in there. And sometimes that's big, The other thing that you mentioned was that you hired a mentor as well too. Did you always, from the beginning, just start hiring mentors, or what was your first experience with mentorship, and in what capacity? Was it in the restaurant business? Was it where did this idea of mentorship come? Because I'm a firm believer in mentorship. I feel like they'll help you get to where you want to go a lot faster. Yeah, sometimes you have to pay, but it's worth every penny. Absolutely. So what did that look like, and what does it look like now? Are you involved in coaching, mentorship? Are you coaching? Are you mentoring now, etc.?
So my mentorship journey, again, that could start from birth, right? That's our parents, that's our teachers, that's our coaches. These are people that we don't actually realize are mentors to us. At least I didn't realize that until I actually threw down my first $25,000 check for a mentorship program. That was to get into flipping and wholesaling. That was for 7-figure flipping. That was the best money that I put down, because that company took our flipping and wholesaling business to the amazing place it was. And I would like to say that it actually helped us in our multifamily journey as well, because it helped us with the systems to hold on to that company as long as we did. Because even though I started dismantling it in this was the beginning of 2018, I did my last wholesale 2019, the beginning of 2019, because the marketing structure that I had put together was, even though I cut the money, it still ran itself, because people still had our cards and they were still calling us. So that was the big one. So if I take that and I go backwards, had we had them when we first started flipping and wholesaling, we probably wouldn't have done that first flip or that first flip, because we had lost. Even though we made money, we probably, I mean, on average, we probably all made like $10 an hour for all the time, blood, sweat, and tears that we put into that first flip. We made money, but we didn't make the money we should have. So in my mind, we still lost money there. And then, I mean, like I said before, it's those coaches, it's your teachers. I am a firm believer, like you, that mentorship will take you further. You don't know questions to ask. There's all that stuff that you don't know that a mentor will help you with, that a mentor, like, it took us many years to distinguish ourselves and to have a running business in the wholesale and flipping community. And it took us 8 months to do basically the same thing in multifamily, because Jason made and I made the commitment at the very beginning to get educated first, to bring on someone that could pull us up first.
That's so awesome. Yeah, I'm a big believer in mentorship. I love how you took it back to birth though. Like, meaning like your first mentors are your parents sometimes. And these mentors are teaching you about money, they're teaching you about life, they're teaching you about how to treat people. And sometimes the people closest to you may not have the ideas that you need as an individual. Like, I was blessed that my dad was the best mentor in my life. He taught me about credit, investing, real estate. But sometimes people don't have that. And it's okay to go out and search and go out and get access to new ideas. So I thought that was really big. At some point, you dismantled the wholesaling and flipping business. I imagining that you dismantled that because there was just another opportunity that would be a better return on time and investment. Would you mind walking us through that process as to why you dismantled a profitable business? Because a lot of people look at that and they see a profitable business and they just stay there, versus sometimes looking to grow to the next level or take the next leap in their career. Why did that happen?
I've gotten a lot of pushback on that story, because they're just like, why didn't you just keep it? You were doing well, da 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 da. Yes. Thing is, we're doing really good, but we knew we could be great. We knew we could be better than just the good that we were doing. Like I said, we had so many balls up in the air. I was like Jason and I were juggling growing a family. We wanted 3 children, and we had 2 at the time. And it was a decision that was actually made when I went to my last meeting with 7-figure flipping. And I was sitting in the hot seat. We used to do this thing called give and ask. And my give was always multifamily, because I always thought that multifamily was the next step for, if you're flipping and wholesaling, get into multifamily, either actively or passively, because I mean, there's so much there. There's so much you can do. So, and my ask was, I need focus. I am falling apart under this weight, under all these businesses we have. And I really, really went down. I was like, I just need somebody to tell me what to do next, because we're doing so well. But it was one of those like entrepreneurial moments where I was like, I can't anymore. Something is going to drop and something is going to break. And I don't want that to be my family. So awesome. Just then, like, one of the key mentors, who is actually one of my really good friends, partner and mentor, but he's partnered up and invested in many of our deals. Maybe it was because I was always so honest in the beginning. He was like, Pili, for the last 3 years, you've been asking us the same thing. It just sounds different every time. You are always asking us for focus. Pili, you know what you need to do. You need to focus. What do you need to do? He inadvertently told me to quit 7-figure flipping and to go into multifamily full time. That's what a great mentor this guy was. Is. His name is Bill Allen.
Awesome.
He laughed at that fact because he basically lost $25,000. I didn't re-up the next year. But the thing is, what happened is that every opportunity I had, every single deal that came into my grasp, into my world, he saw it first. He's invested in every single one of our deals minus the first one. So I've been able to provide him so much opportunity because he gave me the opportunity to make the decision. So that was the moment that I decided that I was going to dismantle the company. I told Jason, he agreed, and we cut marketing. I mean, our marketing spend per month on our flipping and wholesaling company was $15,000 per month. Cut that. Deal flow started to go down, and I didn't even there was so many deals that I could probably close. I just started farming them out to realtors that I knew because I was at that point and we were growing so much in our multifamily business that I was just I would rather take a total discount, give me the referral, you close this. This is the seller's ready to sell. Go, you do that. And I would go to, like I said before, it's not that I was a bad real estate agent. I was good. But why give those people that I know need great agents? Why would I call myself great when I'm not? So agents that are great are focused in on being great. I am a multifamily syndicator. I love talking to investors. That's what I am great at. So why wouldn't I just focus in on what I am amazingly great at?
Yeah.
But that's why I dismantled a profitable business, because also my husband and I can't put down the hammer. We both believe we can do it better. And that's just the truth. Yeah. He believes that he can hammer it better together. He can paint it cheaper, and he can do all the things himself. So do I. So we were really bad at the time. We've gotten much better at leveraging people. We've gotten better with large multifamily. You have to, it is a must. Multifamily is a team sport. Flipping and wholesaling, you might be able to do it on your own, but multifamily, you need those team members around you. You need those team members that can underwrite better than you, that can asset manage better than you, that can talk to people better than you. You can bring in people with amazing superpowers and have everybody benefit from the economies of scale that multifamily can bring.
I agree with you 100%. What I tell people, Pili, sometimes, and by the way, I love the story. The story was amazing. One of the reasons is it takes a lot of courage to be able to recognize something like that. And I think a lot of people get held back sometimes because they want to get to second base. They want to get to third base. But in order to do that, they have to take their foot off first base, which that's what the flipping business was. You had your foot on first base. And then the other thing is the focus. Focus is a powerful thing. And I love how your mentor basically told you, you're asking the same thing, just in a different way, which almost feels like you're going around in a circle almost. You're asking it differently, but in essence, it's the same exact thing.
You hit it.
What I was going to ask you is, I've heard this multiple times, and now I own a 25-unit apartment. We hired an on-site property manager. We have a handyman that we have on call at all times. I've kept them busy since December of 2019. He's worked for me exclusively just on our portfolio. And I understand that it's a team sport. Also, there's larger margins than a flipping, so it makes it so that it can be a team sport. What I was going to ask you is, how do you go about finding talent? How do you go about attracting some of these team players to make them want to work with you?
Great question. I talk to everyone. Everyone and anyone. If you're just starting out, it seems like a difficult task, but start with a broker. Brokers want to sell properties. Start there. Call as many brokers as you can. Strike up conversations. Go to RIA meetings. Whether the world opens up and closes down, whatever happens, pick up a phone. Everything you need is on the other side of this. I actually stole that from one of my partners. Everything you need is on the other side of this phone. You don't necessarily need to meet people in person, but call, Make sure people know that you are out there, you are looking, you are trying to learn, and then get referrals. That is huge. That is huge. I mean, you as an agent, you know, so like as agents, part of our income comes from referrals. We want to be referred business, and we refer business out. It's the same thing with everything else. Have your book of people that you can refer people to and that people can refer you to. So when you're talking to brokers and you're telling them that you're trying to get into a certain market, do they know of any amazing property managers that you can talk to? And then do your due diligence, do your homework, talk to other building owners that might be working with those property managers, get the information on them. Google is a great asset for everybody. Like simply Google property managers, say you want to get into Atlanta, property managers in Atlanta. And I'm certain like a list of property managers will come in, and just start calling people. Like really, you can't make enough relationships. You just can't. Like you just get out there and call people. Like today, I did at least 15 calls, and that's while like managing my children. That's while trying to keep my house in order. So there's no real excuse. Like whoever it is, whatever team member that you want to bring on your team, get those referrals and just start talking to people. And please write down everything. Have a chart, Google spreadsheet, write down their name, their address, who they are, property manager, location of market. Because if you're like me, I am not a systems person. So I've had to become a systems person. I need to write everything down or it goes out of my head. Just like earlier, you asked me about like the numbers for my first deal. I didn't even think to bring it up. I'm like trying to find it on my Google spreadsheet and I can't find it. I'm just like, oh, well, I guess I'll put that into Facebook someplace. I'll put it in the show notes. What Pili's first deal was, but that's not stuff that stays in me because I write it all down. I get it out of my head. I write it down so that I can go back and say, oh yeah, I talked to ABC Management Company in Atlanta a month ago. I have this deal that's going to close there. I need to call them again to see if they're available or if they can look at the property with me, or if I can like strengthen that relationship, or better yet, I'm going to be in Atlanta to look at a property. Let me make in-person, like I'll take this broker to lunch. I'll go have coffee with this property manager. I'll go to like XYZ's office. Like do what you need to do to get yourself out there.
So important. It's funny because I actually keep a short list whenever I talk. It's so funny because sometimes you meet the person that's going to help you in a future deal, maybe 2 years in advance. And if you can make that note of that individual, what their strengths are and what they like to do. Like I just hired one of my clients that is retired and I needed a certain position in my company that's not full time. And I have a little short list of every client. I have a short list, or not every client. I keep short list of people that could potentially help me at some point in the future. And I have to make sure I enjoy working with these people, meaning that they're nice people. If they're nice people and I know that they have a certain talent, they're going on that list. But that is so important what you said about writing it down. I met a guy on Saturday that he's like a runner and he does it for other people. And I said, would you be open for more work? And he's like, yeah. I made a note of him as well, too, in case we ever need him as well, too. You know your strength very well. You know what you like doing. Like, how did you find that? Like, because a lot of people focus on things that either they don't like or they focus on things that are just going to make them a lot of money. But then they're miserable, they're depressed, they don't have enjoyment in their life. How did you figure that? How did you figure out that was what you loved to do? Because I could tell by talking to you, like you've got the biggest smile right now, which is awesome. But how did you know that?
Well, I want to say age. I'm going to be honest, I'm 41. So I've had 41 years to come to terms with this. And I believe we grow with every second, with every breath. But like looking back, I have never liked to be told what to do. I've actually never liked to really stay in one job. I've never, like, if it didn't if what I was doing didn't go with how like I was feeling, or if I didn't like the job, I would just walk away. I mean, I would walk away nicely, give my 2 weeks or what have you, but I would walk away. And this was like throughout like childhood, throughout like I was in a dance program in elementary school. The teacher yelled at me once. I told my dad, and my dad like went and talked to him, and I was like, I never want to go back to that. So carry that into college. I had multiple jobs in college. I could never find the one thing that I really, really wanted to do. But throughout everything, I really liked talking to people. Like I really liked making connections. Even when I was managing bars and bartending, what do bartenders do most besides give you your alcohol and maybe some food? They talk to you. We're like the first step before people go into therapy. Like I've heard so many stories as a bartender. I would blow people's mind with some of the things that people have told me, and they weren't always inebriated. But I've just loved talking to people. So when we jumped into the real estate industry, I realized that this is my superpower. I love talking. I love connecting. I mean, I really like hugging people. Like I love connection so much. I'm like the person that goes and hugs everyone, which was really bad for me when COVID hit. So all I had, especially during this time, was my voice. So that's how I connected. So that's how I connect with people on Facebook, on social, on Clubhouse, you name it. I tried my best to just get out there and connect with people. So that's how I found my superpower. I looked into my past and saw I could have just seen all the things that I wasn't good at. I mean, I basically told you a lot of things that I failed at, or not failed at, but just couldn't stay with. Dancing, I don't know, being a librarian for a little while. I shelved books. So I guess I wasn't a librarian. I was a cocktail waitress. I could tell you all the jobs that I've done. It's crazy how many things that I've done in my life. And I could just like chalk them down as failures. I mean, how many times you look at your past and say, oh, I didn't do that. Oh, I should have done this. Oh, I didn't do that correctly, blah, blah, blah. Instead, I looked at my past and I looked to that girl, that child that I was, that girl that I was, that young adult that I was, the adult that I am now, and mother that I am now, and trusted that her growth, her path that she's been set on, and I started trusting more in that path and started seeing the good things, like what was going good for her as a child, what was going good for her as a teenager, because I could focus on a lot of really bad things. Yeah. Instead, I choose. A lot of people accuse me of being all sunshine and rainbows, and I will take that accusation because I choose. It's not that I choose not to look at that bad stuff. I choose to grow from those bad things, and I choose to see the good. Like, how did I grow from that? And what was the one thing that went through is my ability to communicate. I love communicating. I love making this connection. I love connecting with you right now. I love connecting with whoever's on right now. I love connecting with you too. So yeah, that's how I grew into and learned what my superpower is. And I'm always defining and refining it. Growth doesn't stop just because I've figured this out. I'll figure something else out maybe in the next minute. But this is my superpower as it is right now. I am excellent at communicating and I love doing it. I love communicating and I love making connections and I love making those relationships.
And it's funny because everybody has a superpower. Like everybody has one. You just have to figure out what it is. And the best way I like to explain it is we hired a person that was a phenomenal accountant. And then we put her in a position where she had to talk to people and she had to manage 20 different tasks at one time. And she hated it. But everybody has their superpower, something that they're extremely good at, that's their gift. And if they can focus that energy, it wasn't that she was a bad person. It wasn't that she was a bad employee. She's a phenomenal person. It just, she wasn't doing what she was good at, which is her gift. So take me to the syndication business, to the multifamily investing business. What did that business look like when you first started? And what does that business look like? And what I'm referring to is more or less in terms of personnel. Like, were you always the investor relationship person at the beginning? Like, was it just you and your husband at the beginning? Then how has that grown into what you guys have today?
So when we first started, I was still focused in on the I was still focused in on the wholesaling flipping industry. I actually needed to take that to completion. So while I was even though I was supposed to be focusing, and I just realized this right now as I'm talking to you, I didn't in those first couple of years because I helped take our first 94 unit to completion.
Mhm.
More from the background, we were all learning together. We were trying to figure out those questions that we didn't know the answers to. I was very much the communicator. I started communicating with my new investors and the new thing that we were doing, all the while bringing our flipping and wholesaling business to a close.
Yeah.
So it was myself, my husband, and our partner, Kevin, who was actually Jason's co-captain in high school football.
Okay.
So they were really good friends, and he was also attached to, I believe it was CoStar. So it was a great combination of strengths. And we were able to take down that first multi-unit, but that was like the first partnership. Yes, we brought on the brokers, we brought on our attorneys, we brought on our cost seg people. I mean, all these people that we needed to take the entire thing down. But the first general partnership consisted of us three. Now what it looks like is now Kevin invests in all of our deals. He's found that he wanted to know more about it, but he also likes the passive sense of it better. He likes to open up his mailbox or open up his income statement, his bank statement, and see that he's gotten that distribution. So our team, our latest acquisition, for instance, and I actually love this story because it brings me back to some of my old mentors and now our investors. So we have this one investor in particular. His name is Andy McFarland. And I'm mentioning him because he's actually well known in the flipping and wholesaling industries. And he just partnered up with us on our latest acquisition, which was in Arkansas. So as soon as this came to me, I know Jason and our assistant Alessandra were looking at it. We're really, really digging in. And as soon as I knew that this was something that was going to be taken to be put under contract, I sent it only to one person. My husband didn't know it at the time, though. He was like, "Okay, we have this under contract. Let's send this out to our entire database because we're going to syndicate it." And I was like, I think I'm just going to send it to, because this is back to knowing your people. And I knew that this particular investor and former mentor of mine and great friend was looking for an asset where he could be a part of a small partnership, be a part of the general partnership, because he basically stopped investing in our deals because he wanted to be more active. So he said, Pili, and this was about a year ago when we had this conversation, and I remembered it. He was like, Pili, I want to be more on the active side. So I was like, let me send this to him and see what he says. No joke, a few hours later, I get the email. Can we talk about this, Pili? How many people have you sent it to? I'm just like, let's talk about it. We get on a phone call, and he basically brought all the equity to the deal.
That's so awesome.
He brought all the equity to the deal. And Jason and I bring our asset management abilities, and our assistant, now partner, Alessandra Thompson, actually started her own company and became part of the general partnership as well. So we're also bringing her along because she did such amazing work on this that we want to honor that, because I don't think we could have, like anything, could we have done it without mentorship? Could we have done it with all the people that are could we have done it without all the people that we have in our life today? Yeah, maybe. But why not bring those people up with us? So that's where we are today. Now we are able to create the partnerships that we want with the opportunities that we have. So one of the other current deals, or not current deals, one of the deals that we closed this past December is the 902 in Murfreesboro. It was a 93 unit that was going to be with our partners, Chad King. He actually he put it under contract. He was the acquisitions person, and he brought in his partner, Bill Allen. So Bill was like, this is a little bit bigger. This is a little bit bigger project that I'm used to. Why don't we bring in Jason and Pili? Because they are the asset managers. I mean, my husband is an amazing asset manager and teamed up with my ability to raise money and talk and speak with investors. Like between myself, my husband, Bill, and Chad, we created an amazing partnership. So
awesome.
I guess where the story is going is now we get to pick and choose and surround ourselves with those peers and those mentors and those people that are doing the things that we want to do now. I mean, we did that back then, but it's like up leveling with each and every acquisition that we make, each and every conversation that we make, and being able to just know a little bit more with each acquisition and just to learn every day.
That's so great. What type of deals do you invest in? Like, are you looking for like value add opportunities? How do you know if something's a good opportunity? Like when it comes across your desk, what type of, are you researching the marketplace where they're at? Have you already what do you look for in a marketplace out of state? And also, we'll start off with that question.
Perfect. So we are looking for underperforming assets, either on the operation or the management side, usually both. And we look for those operational deficiencies because that's where Jason and I mean, yes, the numbers have to work, but that's where Jason and I find how we can make the numbers work for us. What operational deficiencies and what management deficiencies are in this particular building that we can bring up the value of the building. Like for instance, one of my favorite stories is we were walking one of our unit, or not, it wasn't ours at the time, but we were walking a building in Kentucky once, and we go to the front desk and we ring the bell, the door's locked, nobody answers. Ring the bell, door's locked, nobody answers. But we can see a woman sitting there watching TV in the office. So we start knocking. She comes and opens the door and basically goes back and watches TV. And I'm like, hey, we're like, hey, can we speak to Trudy? And she's like, I'm Trudy. And I'm like, okay, well, there you go. Here's one managerial and operational deficiency that was going to be taken care of like right away. I mean, can you imagine being in that position, being a tenant living there?
Yeah.
And you're knocking on the office. It's one thing for the office to be closed and have like a box there where you can drop your rent. At least then nobody's there. But to have somebody in there watching TV while you're trying to like talk to them, I mean, I wouldn't feel taken care of as a tenant.
No, you're in the customer service space.
Yes.
Tenants are your customers,
Exactly. So we knew right then and there that they needed a new property management team. So that was one value add that we're going to be able to bring. We look for, when we walk the units, we look for ways that we can bring up the units. I mean, we're not going to put marble into a building that doesn't need it.
Yeah.
But if it's like, if the countertops are cracked, if the stoves aren't working, these are things that we need to go in and fix and make sure that we can bring that value to the building. So we basically level up the building and bring the value up.
How
long answer your question?
How long are these projects taking now? Because I bought my 25 unit and same problem. Like the manager had bushes like 5-6 feet tall all around the building. There was trash everywhere, and that was unfortunately that was one of the first things that I changed. I changed the management right away because I said if he's managing it this way for the old owner, there's no way he's going to manage it anything differently for me. Like, how long does it take from the point where you're buying the building to maybe exiting, meaning like a refinance, or are you guys exiting and getting some of the investor money back? And if you can kind of go over that process a little bit, because one of the pet peeves I have for California is that, yeah, we have value add opportunities, but there's rent control in all of California, meaning you could only raise it 5% plus inflation. I'm imagining that in Arkansas, Kentucky, there is no rent control. Also, I'm imagining that the eviction laws are a little friendly, more landlord friendly than they are in California.
Yeah, that's why I don't invest in California. And while I lived in New Jersey and flipped and wholesaled in New Jersey, I no longer invest there, or I don't do any more
Yeah.
buy and holds there. I only go, number one, if you take away anything from this conversation, go into landlord friendly states.
Yeah.
Go into you can Google it. It's free information. Go Google it and you'll find a list of landlord friendly states. Of course, with the eviction moratorium, and we can dive into that, it's actually a lot easier to work. I find it's been a lot easier to work with my tenants here in like Kentucky, in Tennessee, and in Arkansas. In comparison to some of my peers who are still investing in New Jersey. I mean, there's still people still need a place to live, but people seem to be taking advantage of the system more in those states where they know that they can, unfortunately.
I agree.
So that said, let me make sure I get to what was your question again? I lost my train of thought because we went into that.
The question was more or less like, or maybe I could explain it this way. What does the process look like? Like, okay, you buy the asset, you fix
how
it
long
up,
it takes to reposition, right?
You reposition.
Okay.
And maybe you can go in a little bit details as to what that looks like, just so that people can get an idea, if you're open to that.
Perfect. So the repositioning strategy is we go in and we first we have to take a look at building. We always change the property management team. Always. We've never kept the same. Because like you said before, chances are the deficiencies that they had with the former owner, they're going to have the same with you, and they're going to have the same like conversation. So we switch up everything.
Same thing I
We
do.
hope to have the refinance, that capital event. We hope to have that refinance within the first 2 years. We've done it in 18 months, and we've done it in less time. When we underwrite our properties, we underwrite it into 7 to 10 years, depending on the property. So, but we've never held a property for that long yet. We've actually exited multiple properties. The first 94 unit that I talked about, Norbrook in Kentucky, in Louisville, we actually exited that in less than 3 years because it was just perfect timing. We had somebody put an offer on it. We put it out with a broker, and got more offers, ended up going with that first buyer.
Before you move on, what was the price of the first unit? Approximately how much did you guys put into it, and what did you end up selling it at?
Okay, you know what? I'm going to actually pull up that information for you because I've already explained. I don't keep that information in my head.
Okay, no problem. If we can get to it later.
No, I'm pulling it up for you. I am pulling it up for you. So.
You know what's funny?
So we actually.
You have.
What was that? I'm sorry.
I was gonna say I keep some of that. Like maybe I need to do a brain dump because in my head, I think I have too much information in there sometimes.
I don't when it comes to numbers, and forgive me, I am pulling up the original numbers, but I don't have the numbers that we sold it at. So the original numbers, I'll tell you what the original numbers were. So the purchase price was 2.3.
Mm-hmm.
The capital improvement budget was $150K. And then the closing costs and operating capital was $226K. So the total capitalization was basically 2.7 for the entire project.
That's awesome.
And then for those people who see this on Facebook, I will go back in and find the numbers because I don't want to waste your time looking for it. I will find the numbers on the sale of the project.
That's
That's
awesome.
something else I get pushed back all the time when I come on interviews. They're like, why don't you know the numbers? I'm like, I just don't.
That's okay.
I
I
just
don't.
don't.
Yeah, I for some reason my brain always loves the details, so I
I
love to get into that.
completely understand. You should have my husband on the show. He is my numbers guy. If
Awesome.
you asked him that, he'd be like, dot, dot, dot. You asked me about my investors though. You asked me about like when their birthday is
That's awesome.
or what they like to invest in, or if they have, 700K on the side that they can invest with. I'm the person to talk to. If you want an investor that has money, talk to me.
That's so awesome. Okay, so then we rehab the property, and then you try to refinance within 2 years, and then at some point you exit. Now, are you 1031 exchanging into other buildings, or are you guys just simply cashing out and basically distributing the capital to the investors and to yourself at that point?
We do that.
That's so
We
awesome.
just cash out and we distribute the returns to the investors. We have
That's
not
awesome.
1031 as of yet.
Cool. And then, how do you guys find these deals? Like I'm imagining that like sometimes I hear that it's hard to find deals, or people say that. I know that you're a relationship person. What would you say, like for somebody looking to maybe invest into multifamily, what would you say a good way to find opportunities would be?
Talk to everyone. I know I already gave that answer, but it's true. Talk to everyone as you get into this industry.
Uh-huh.
And this is not necessarily for like your first time investors, but as you get into this industry, just talk to people. Let people know what you're doing. If you're a flipper or a wholesaler, or even a real estate agent, and you want to get into multifamily, say that as many times as possible all day long. This is what you're looking for. You are looking for 50 to 100 units in Kentucky, BC class assets, buildings that are underperforming. And these are the things that you're looking for. And just tell people how excited you are to get into this new business.
Yeah.
And you never know who that might have a deal, or might know another agent that has a deal, or might know a lender. So one of our lenders actually brought us that building in Arkansas that I told you about that we closed on. And we had not invested in Arkansas before. We had not even looked at it. He just mentioned, I'm from Arkansas. The market's pretty good there. And I know of a building that just went up for sale. Do you want to look at it? So we researched the market, great market. We researched the area, great submarket. We took a deep dive into the building. So right now, I think the second part of your answer was like, how do we have a kind of a machine now. So how the machine goes is the deal comes in, Jason takes a quick look at it, and then it goes to Alessandra, who is our underwriting machine. She's only been with us since March. She learned, she knew some underwriting at that point, and since then she's helped us close one deal, and she continually looks at deals over and over again. She makes the first pass, Jason takes the second pass, and then I look at it. Because if it doesn't pass them too, there's no reason for me to look at it. So I look at it, I try and see if there's anything I can find. Usually not. There's sometimes I can. And then we dive deep into it. But finding the deals, yes, it's quote hard, but it's harder if you don't put yourself out there.
Yeah.
And yes, deals like go like this these days, because people have there's so much capital out there that needs to be like used. But you can get in there. I mean, we just closed a deal, and that was from our relationships. So that's why relationships are so key. I mean, if you're not a big like REIT, if you're not a big house, if you're just starting, you have to depend on those relationships you make, and you have to depend on like those people that you reach out to on podcasts. I mean, I'll leave my website for anyone that's listening to this. If you want to reach out to me, if you want more information about what we do, please reach out. If you want to reach out to anyone you see on the internet, reach out to them. Chances are they'll like take 15 minutes out of their day to talk to you, because they know the strength of relationships. They know that one day, one of those phone calls, those 15 minutes is going to make that make them that deal that will make themselves and their investors a lot of money.
Absolutely, the relationships. It's all in there.
Comes back to that.
The last question I wanted to ask you, Pili, is I know that you said that you researched the market, you researched the sub market. What do you look for, or what do you guys look for when researching the market? Are you guys looking at population? Are you looking at jobs? And where do you find this type of information?
So we look for job growth. We look for areas that have more than like one subset of like a worker. Like you don't want to go into like an all military town. You don't want to go into a town that's only based like around Amazon. So we like to do excuse me. When we know we want to go into a market, one of the things that we use is Google My Maps. Mm-hmm. And we map out the comps in the area, all the buildings that we can find in the area, we map that out. And then we also map out where are all the Starbucks, where's all the Krogers, where's all the shopping centers, where's all the parks, where's like every single thing that could mark out the path of progress. Where can we find that in this town? And we put it on this map so we can always go back and take a look at it. Another good place to go to is City Data. Mm-hmm. City Data, you plug in the MSA, you can find a ton of information. You plug in the sub-market, you can find a ton of information. This is everything from job growth to crime data to everything you might need, or census records. So right now, they're still working on inputting the 2020 data. They have something called the vintage 2020 data, and that's data. So if you're going to the census, know this. And this is data that everybody uses though. They're using that data is actually based on the 2010 census. Mm-hmm. So, but it's still data that everyone uses. So just a little tidbit of information. So citydata.com though is one of the best places to go for information on things like job growth and things like that.
Perfect. Now, you said that you guys map out the Starbucks, the Krogers. Why is that? And then what is, I read in a book, The Path of Progress, and it was probably, I read a book, Emerging Real Estate Markets by David Lindahl, and it explained what the term The Path of Progress means. And it was one of the best books that I've read on multifamily investing. But why do you guys look for the Starbucks, the Krogers, and how would you describe the path of progress, and how does that affect your investment?
So the reason why, and that too, both of them tie together, because you want to see where these big companies are going to, because they're already doing the market research for you. So if you see a Starbucks opening up in the corner, you want that multifamily building that's right next door. You want to go, if you see a Target opening up, if you see Amazon going there, if you see Google going there, you want to be there. You want to be the ones that are going into that market and going into those multifamilies and really researching in and diving into those areas that these big businesses are.
That is so awesome. Yeah, that is great. It's funny. Cool. So is there anything else? Is that your son? I think
this is my son. Say hi, Luke.
Hi.
Hi, Luke. How are you?
Can you go to Daddy, please?
3.
Thank you.
Good. So I think that's pretty much it. I really enjoyed this interview. I've enjoyed the energy. Obviously, I've enjoyed the story as well too. I think the audience is going to get tons of value from it. The last thing is, any final thoughts, and where could people find you if maybe they love the story, want to connect with you? What is the best way for people to find you?
The best way for people to find me is just my website, www.yarusiholdings.com. You can find everything there. Best way to get into direct contact with me is to go to my investor portal, sign up there, and that'll take you to a link to my calendar, and you can get onto my calendar. I do 15-minute phone calls with really anybody that wants to have one. So we can connect that way. And then the last thing I would leave your listeners with is really It's the relationships you make. I mean, I'm going to be completely honest. I'm not a data junkie. I'm not like the person you go to talk to when you want to know the numbers. I can open up the spreadsheet. I can do all that stuff. So if there's any of your listeners out there that are just like, oh, I get so nervous with that stuff, it's okay. If that's not your superpower, then surround yourself with those people that is their superpower. And that's what I've done. I am a relationships person. Like, I love talking to people. Yes, I know the numbers. It has to be in front of me on a spreadsheet though. I can dig into that, and I can really I've done the study and I've done the work. So if you are in the same position that I am, do the study, do the work, dig into books, dig into podcasts like this. Surround yourself and aspire to be with people who are doing those things that you want to do. So starting off with this podcast, this is a great start. Now, what's next? So that's another thing I want to leave with your listeners. What's next? You've listened to this. Now what? What are you going to do with the information you just heard? Take that next step, reach out and figure out and focus in what you want to do.
That's great. I'll let you know, my favorite part about doing this podcast is the people that I'm meeting. Like, I am meeting the most amazing people in this world, and I get to spend an hour with them. Literally, like, yesterday I had a guy named Steve Rosenberg who's also been on Bigger Pockets, and the people that I'm connecting with is just, it's mind blowing. So I want to say thank you for taking the opportunity, for sharing with our audience tips, tricks, everything. I really appreciate it. I look forward to staying in contact with you and maybe even investing in some syndications with you. This was episode number 75 of the Morales Group Show. If you've enjoyed any of our interviews in the past and you keep enjoying them, make sure to hit that subscribe button with that little bell. That way you're notified of any future episodes that we have coming on. Our mission is to educate and inspire young or old, anybody looking to take their life and business to the next level. Once again, episode number 75 of the Morales Group Show. This is Pili, and then your last name is
Yarusi. Pili Yarusi.
Perfect.
Aloha.
Thank you so much.
Thank you.